Welcome back to the channel, everybody. My name's Artie with CoinCasso, and this is Bitcoin Today, a show where we talk about everything cryptocurrency to keep you guys up to date and informed on all things happening in the crypto industry. In today's episode, Bitcoin's price hit $12,000 again, and here are 3 reasons why traders are bullish midterm, and also how Jerome Powell threw the US dollar under a bus during the latest central bank meeting. We also do a brief technical analysis on Bitcoin to see where the price is going to go in the future and how the US dollar crashing is going to impact cryptocurrencies. Good morning, everybody. It is Wednesday, September 2nd. Thank you so much for joining me every single day. I can't express to you guys how much I appreciate every single like and comment and share on all of these videos. So to all of my subscribers, thank you. And if you're new here and you like what you see in this video, consider subscribing down below and tick the notification bell to get notified every time we upload a new one. Welcome, everybody. You guys are tuned into the official YouTube channel for the CoinCasso Cryptocurrency Exchange, the official partner of Paris Saint-Germain. So if you guys are looking for a place to buy, sell, and trade cryptocurrencies, including some of the top altcoins, check out CoinCasso in the link in the description below. All right, now let's jump into these prices. Bitcoin currently sitting at $11,867, up 1.17% from yesterday. Ethereum up almost 6%, sitting at $473. XRP is up 5.67% at 0.2990. And Chainlink only up 0.3% from yesterday's 6% down at $15.89. Now let's jump into CoinMarketCap and see who are the top performers in the last 24 hours. As you can see here, DFI Money is up 117% in the last 24 hours. Flexicoin 36%. Band Protocol 17.2%, Tron up 15%, and Curve DAO almost up 10%. Looks like there's still a lot of money to be made in the altcoin space. All right, now let's jump into TradingView and take a quick look at Bitcoin to see how it tested the $12,000 barrier. As you can see here, this is about the time that I made yesterday's video. The price was already pushing up. We saw a little bit of a drawback down to 11,800 and then a huge rally up above 12,000 to $12,085. $12,000 is a massive resistance point, so the bear started to sell off, but the bull started to take over again, bringing it up above 12,000 again to 12,054. Since that time, over the last 8 hours, the price did drop down all the way to 11,824, but seems to be slowly climbing back up. Okay, now I've taken Bitcoin out to the daily chart, and each one of these candlesticks represents one day. Since August 2nd, we have actually broken through the $12,000 barrier on 4 separate occasions. Now, if you remember me talking about resistance levels in a previous video, the more we hit a resistance level, the weaker that resistance level gets. So as the price pulls back right now from the $12,000 mark, at most, I think we might hit the $12,000 barrier one more time before we have another pullback and break through it. Then once it's comfortably above that $12,000 barrier, it will come back down and test it as support. Hopefully on that test, it'll continue back up. But in most cases, what ends up happening is a break through that barrier, come and retest, come back up again, and then another retest going all the way up. When you're going long, you want to look for a W formation. If it comes back down on this second leg and breaks down below that $12,000 barrier, the price will continue to shoot downwards. So for a bullish trade, you're looking for a W formation, second leg going up, and for a bearish trend, you're looking for an M formation and the second leg going down. If you're looking to trade this area, be very, very cautious because it might actually break down below the $12,000 barrier while market makers are situating people to start selling and everyone thinking that the trend is going to continue down. They flip the script and go long on Bitcoin. So this area right here is a no trade zone. You want to look for clear confirmation that it's going in the opposite direction, not just above or below this $12,000 mark. Now, for those of you that are true fans of the show and watched yesterday's video, I primarily talked about Ethereum. I talked about this higher high and this higher high, this higher low, and this higher low just barely. And I said what needed to happen with Ethereum is this candlestick to close at about $85. It did exactly that, coming to this $86 to $88 level. Hopefully next we see a pullback here to about the $430 mark, but no further than $400. Once this happens, what I'd really like to see is a push above this $500 barrier, not using it as a resistance level whatsoever, and then coming back back down to test it. This $500 level really concerns me, and I'd really like to see this pullback just so that we can continue this higher high and higher low scenario. All right, now on to the news, because it's very important. Every year, the central banks have a big annual meeting in Jackson Hole, Wyoming. They talk about the forecast of the US economy as well as the US dollar. I'm going to get into that article after this one, but it's very important to keep in mind. This first article is titled "Bitcoin's Price Hits 12K Again, and 3 Reasons Traders Are Midterm Bullish." 3 factors are leading traders to become more bullish on Bitcoin in the short to medium term. The potential catalyst is the declining US dollar, the strength of the $10,000 support, and Ether's strong upsurge. According to cryptocurrency trader Scott Melker, the US dollar is showing slowing momentum, and this is shown by the dollar breaking down from a 10-year long channel and demonstrating a clear rejection. The dollar looks dead, as I have been saying for months. There was a weird euphoria last week that it was bouncing. Now the breakdown from a decade-long channel is clear. It should bounce up to retest at some point, but there's nothing bullish, which is very good for Bitcoin. Many analysts interpret a declining dollar as a positive for Bitcoin because alternative stores of value are priced by the dollar. In recent months, the dollar has fallen substantially against other reserve currencies. Coincidentally, gold and Bitcoin have record steep rallies since April. Now, I'm sure most of you are aware that the Federal Reserve has been printing money like crazy, causing inflation of the US dollar, causing the US dollar to be worth less. If you look at all the Forex markets, you can see pairs of the British pound versus the dollar climbing like crazy. Same with the euro and the Swiss franc. And like I discussed yesterday, there was an article that said Warren Buffett is going against the dollar as well. These are all big signs of showing weakness in the US economy and the US dollar. When this happens, many people move their assets to a safer store of value like gold. And now that we have cryptocurrencies, it's another good store of value. Bitcoin is also considered a digital gold. Now let's jump into this second article, which is very important. Jerome Powell throws the US dollar under a bus in Jackson Hole. Fed Chairman Jerome Powell threw the US dollar under a bus last week at the central bank's annual Jackson Hole, Wyoming meeting. The Economic Policy Symposium, hosted annually by the Federal Reserve Bank of Kansas City, an event attended by finance ministers, central bank managers, and academics, among others, was held virtually due to the pandemic. To be sure, the Fed has persisted with an accommodative monetary policy posture since the Great Recession, despite strong years of growth in the middle of the Obama years and sluggish yet consistent positive growth the rest of the time. Before the pandemic, the Fed had begun raising interest rates beyond the zero range, as the need to leave something in the tank should another crisis ensue was acknowledged. Those moves were roughly in line with growing the central bank's global concerns, and accommodative monetary policy had failed to generate robust growth rates and risked making central bankers toothless in the case of a serious recession. Nevertheless, central banks around the world persisted in their efforts to inflate economies and encourage growth. Not that there was no growth. In fact, when Powell took over the reins in 2018, the United States was enjoying the longest period of economic expansion in history, but the growth was sluggish. Key points in this article are right here. Balance sheets ballooned by over $3 trillion to around $7 trillion with no end in sight. And last week, Powell revealed a much anticipated stance of average inflation targeting. Since 1977, the Fed's dual mandate has been to maintain a maximum employment and stable prices. The latter is considered a 2% inflation rate. All that changed last Thursday by targeting average inflation. Powell indicated the Fed would keep interest rates lower than they needed to be. In today's context, the picture is frightening. Inflation has run significantly shy of 2% since the Great Recession. To drag that average up to the target rate retrospectively, Powell and colleagues may be set to target levels around 3% for a prolonged period of time. Should inflation continue to run high, we can expect many investors to use Bitcoin as a hedge, propelling its price up further. Throughout 2020, numerous analysts have predicted Bitcoin to reach heights that are unheard of, and it's undeniable that the market is in an even stronger position than it was during its 2017 bull run. Since then, the market has matured greatly, with increased institutional involvement and media popularity as a result. This is a simple example of cause and effect. The reason why cryptocurrencies were made was as a hedge against the US economy. After the US economy took a huge tank in 2008 and we had the Great Recession, that's when cryptocurrencies were invented. A digital monetary system that prevents against inflation. With the Fed now printing massive amounts of money, causing quite a high percentage of inflation in the US dollar, while the dollar is becoming weaker and weaker and weaker, other stores of value are increasing insanely. I think the next 2 months for cryptocurrencies are going to be extremely, extremely bullish. The weaker the US dollar gets and the longer that it takes to bounce back, that entire time is going to be extremely crucial for Bitcoin to grow and prove that it's a stronger form of value than the US dollar. So Bitcoin might see spikes up to $15,000, but keep in mind, as Bitcoin grows, other cryptocurrencies grow in tandem and sometimes more, which is why I'm so bullish on Ethereum, because if you look at the percentages gained over time, Ethereum is much more of a performer than Bitcoin. Okay, so overall, cryptocurrencies is a good bet right now. Now we've got a big change to the fan of the day competition. Leaving a comment down below on any one of the videos could enter you in a chance to win fan of the day. Usually it's a small segment at the end of each video where I share the comment and dub the fan of the day. That comment stays as the pinned comment on that video, but now there's going to be an incentive for it. I want to show you guys how much I appreciate you. So starting from tomorrow, fan of the day every single day will win 10 USDT. There are 2 rules to win. Rule number 1 for the competition is sign up to the CoinCasso Cryptocurrency exchange, because when you do, you get an ID number. Mine is 6016. You can find this number in the affiliations tab in the dashboard. There's going to be a referral code with 4 digits at the end. And the second rule is commenting on these videos. When you leave a comment, at the end of that comment, just put the number sign and then your 4-digit code. That way, when I choose fan of the day, I'll have your ID number and I can instantly transfer 10 USDT to your account. Now it's time to choose today's fan of the day. Scrolling through the comments here, let's see what sticks out. And today's fan of the day is Paul Ends. His comment was, September will be a month to remember. Fantastic quote from V from Vendetta. Congratulations, sir. You are officially the fan of the day today. And not to leave you hanging, you will also win 10 USDT. If you sign up to the CoinCasso exchange, comment below your comment your 4-digit code and I'll send you 10 USDT. Thank you for commenting. Thank you for liking. Thank you for watching and subscribing. If you got some value out of this video, don't forget to leave a like and subscribe on your way out, and we will see you back here tomorrow.